In just the last 24 hours, the crypto market has staged a jaw-dropping comeback, and the gains we're seeing are absolutely impossible to ignore. Altcoins are dominating the spotlight. XLM is skyrocketing nearly 12%. HBAR is surging almost 9%. Ethereum is steadily climbing 4%, and XRP is making a strong push close to 8%. Even Bitcoin, the king of crypto, is flexing with a solid 2% bounce today, showing that the market is regaining momentum across the board. The total crypto market cap has now jumped to around $3.73 trillion, signaling that investor confidence is returning and the energy in the market is palpable. Every price move, every spike, and every breakout right now could present a huge opportunity for traders and investors alike. If you want to stay ahead of the game, never miss a market surge, and be the first to know when the next big breakout hits, make sure you hit that like button, smash subscribe, and turn on notifications right now, because in the lightning-fast world of crypto, timing is everything, and missing even a single move could mean missing out on huge gains. Don't wait. Stay informed, stay ahead, and ride the waves of this market with us. Over the last 24 hours, the crypto market has staged a remarkable comeback, and the momentum we're seeing right now is nothing short of electrifying. After a period of stagnation and sideways trading, we are witnessing major altcoins surge with impressive strength. XLM is leading the pack, skyrocketing nearly 12% in just a single day, an incredible move that shows renewed investor interest and bullish sentiment. HBAR is not far behind, climbing almost 9%, while Ethereum, the second largest cryptocurrency by market cap, is steadily moving up 4%, demonstrating that the market's backbone is regaining its strength. XRP is also making waves, pushing close to 8%, signaling that confidence in major altcoins is growing again. Even Bitcoin, the undisputed king of crypto, is flexing its muscles with a solid 2% bounce today. While this may seem modest compared to some of the altcoin moves, remember that Bitcoin's strength often sets the tone for the entire market. A steady recovery in Bitcoin not only restores confidence, but also fuels momentum for altcoins to continue their rallies. The overall market cap has jumped to around $3.73 trillion, highlighting that the total value locked in cryptocurrencies is climbing once again. This surge is a strong indicator that investors are stepping back into the market. Market sentiment is shifting from caution to optimism, and momentum is rapidly building across the board. What we're seeing is more than just small fluctuations. This is a meaningful bounce that could set the stage for larger breakouts in the days ahead. For traders, investors, and crypto enthusiasts, this is exactly the type of market action you don't want to miss. Each price spike, every breakout above key resistance levels, and every surge in volume could present opportunities for gains and strategic moves. Watching these trends closely right now can be the difference between catching the next major move or being left behind in a fast-moving market. While altcoins are seeing strong gains, it's important to remember that Bitcoin remains the main driver of the entire crypto market. Bitcoin's movements are like the heartbeat of crypto. When Bitcoin rises, altcoins usually follow, and when it falters, the market often pulls back across the board. Right now, Bitcoin is showing signs of renewed strength, and traders are keeping a close eye on some critical price levels that could determine the next major market direction. The key levels to watch for Bitcoin are between $115,000 and $117,000. These are not arbitrary numbers. They represent areas of significant historical support and resistance. Hitting and holding above these levels could signal that Bitcoin is ready to break out to new highs, potentially triggering a wave of bullish momentum that lifts the entire market. For traders, this is a signal to pay attention. A daily close above $117,000 could mark the start of a violent recovery, fueled by leverage, liquidations, and renewed market confidence. Ethereum, the second largest cryptocurrency, is following closely behind, acting as the next pillar of market strength. With Ethereum approaching the $4,000 mark, we're seeing critical price action that could dictate whether altcoins continue their surge. Ethereum's price movement often mirrors Bitcoin's direction, but it also has the potential to independently drive momentum in the altcoin sector, especially with the growing interest in decentralized finance, DeFi, and smart contract platforms. A solid push above $4,000 could act as a catalyst for altcoins like XRP, XLM, SUI, and HAR, sparking a coordinated rally across multiple projects. Right now, the combination of Bitcoin stabilizing near $115,000 to $117,000 and Ethereum nearing $4,000 is generating a powerful market signal. We could be on the verge of a breakout that sees major gains across the board. Traders and investors who monitor these levels closely can position themselves strategically for potential upside, while also keeping an eye on volume, dominance, and liquidation levels, which often provide early warning signs of market acceleration or reversals. The bottom line is this: Bitcoin and Ethereum are the foundation of the crypto market. When these two show strength, altcoins tend to follow, and the market cap often rises dramatically. Missing these key movements could mean missing the next big opportunity in crypto, especially in a market that's moving as fast as we are seeing today. Altcoins and market signals. While Bitcoin and Ethereum often steal the spotlight, altcoins are where a lot of exciting movements are happening, and the signals we're seeing in these markets are worth a close look. Coins like XRP, XLM, SUI, and HAR are showing significant strength after a period of consolidation, indicating that traders and investors are gaining confidence in smaller cap assets and are ready to capitalize on upward momentum. XRP, for instance, is approaching critical resistance levels around $3.13. This is a historically significant zone, representing both prior support and resistance from late July. If XRP can reclaim this level, it would mark a major shift in market sentiment, flipping previous resistance into support and potentially opening the door for a broader breakout. Beyond the price itself, XRP has seen an uptick in trading volume, which often precedes stronger trends and provides the fuel needed for sustained rallies. XLM is also showing promising signs, climbing toward the 41 to 42 cents range. Historically, these levels have acted as turning points in the market, creating opportunities for both short-term traders and long-term holders. Reclaiming and holding these zones could help XLM establish a new higher high structure, which is a technical indicator that the coin is poised for further upside. SUI, another emerging altcoin, is approaching its $3.70 to $3.71 zone, a level that has been a strong resistance point since May. If SUI breaks this area convincingly, it could trigger a wave of momentum that may extend into other mid-cap altcoins, creating a ripple effect across the market. Similarly, HAR is approaching a key level around $25.50, which was historically significant in December and May. Holding above this level could reinforce bullish market structure and provide a clear signal to traders that HAR is ready for sustained growth. Volume trends across these altcoins are also very telling. XRP has seen a 24-hour volume exceeding $5.5 billion, XLM roughly $500 million, SUI around $1 billion, and HAR approximately $423 million. These figures demonstrate not just price movement but active participation from traders, which is a crucial factor for validating market trends. High volume at key support and resistance levels often precedes breakout moves and can provide an early indicator of the strength behind a rally. Another critical factor to consider is the interaction between Bitcoin dominance and altcoin dominance. While Bitcoin is the anchor, a shift in market share toward altcoins can indicate the market is entering an altcoin season, where smaller cap coins outperform Bitcoin in percentage terms. Currently, slight weaknesses in Bitcoin dominance, paired with strengthening altcoin performance, suggest that capital is beginning to flow back into high-potential projects, setting the stage for coordinated movements across multiple altcoins. Overall, the market signals from these altcoins suggest that we are at an inflection point. The combination of reclaiming key price levels, strong volume trends, and shifts in dominance could lead to a multi-coin rally. Monitoring these altcoins closely, especially in relation to Bitcoin and Ethereum, provides valuable insight into the next phase of market momentum and the potential breakout opportunities that may arise in the coming days and weeks. Stocks and broader market connection. While crypto traders often focus primarily on Bitcoin, Ethereum, and major altcoins, it is crucial to understand that the broader financial markets, particularly traditional stock indices, play a decisive role in shaping crypto market sentiment. Among all indices, the S&P 500 stands out as a critical barometer of investor confidence and overall market health. Historically, Movements in the S&P have shown a notable correlation with cryptocurrency trends, especially during periods of high volatility, economic news releases, or shifts in global financial sentiment. The connection between the stock market and crypto is rooted in investor psychology and capital flows. When stock markets, such as the S&P 500, demonstrate stability or upward momentum, investors often feel more confident taking on higher-risk assets, which includes cryptocurrencies. Conversely, sharp declines or spikes in stock market volatility tend to reduce risk appetite, driving investors towards safer assets like government bonds, high-grade corporate bonds, or stablecoins. Essentially, crypto does not exist in isolation. It responds to the broader sentiment in global markets, which is why understanding stock market dynamics is critical for predicting crypto behavior. Currently, the S&P is hovering within a critical demand zone. Demand zones are price areas where buyers historically enter the market in strength, halting declines and often triggering reversals. If the S&P manages a strong bounce from this zone, it would likely signal renewed confidence among both institutional and retail investors. This optimism tends to spill over into crypto markets, providing the necessary momentum for Bitcoin to reclaim key resistance levels, Ethereum to approach $4,000, and major altcoins to follow suit. Bitcoin, in particular, behaves as a risk-on asset in correlation with high-growth stocks such as tech, meaning a rebound in equities can directly bolster crypto gains. Altcoins, due to their smaller market caps and higher volatility, tend to amplify these movements, producing pronounced upward swings when the market turns bullish. Beyond correlation, liquidity and market structure also play a significant role. A bounce in the S&P can trigger renewed buying across multiple asset classes. In crypto, this is observed as increased trading volumes, short covering events, and leveraged positions being unwound. Each of these factors compounds upward momentum in what traders call a violent recovery. Short covering, in particular, occurs when traders betting against an asset are forced to close positions as prices rise, fueling further buying pressure. Liquidity inflows from stock market gains act as the catalyst, while technical trading triggers act as the accelerant. Macroeconomic factors further deepen this connection. Indicators such as interest rates, inflation data, employment statistics, and consumer sentiment all influence stock market performance. Positive macroeconomic data can support a strong S&P rebound, which, in turn, often leads to increased appetite for high-risk assets like crypto. Conversely, disappointing data or unexpected economic shocks can trigger sell-offs, impacting cryptocurrencies even if underlying fundamentals remain strong. This demonstrates that crypto markets, while innovative and decentralized, are not immune to macroeconomic realities. It's also instructive to understand how market cycles interact across asset classes. Bitcoin often leads altcoins in directional trends, but its performance is influenced by external forces like stock market movements. For example, a bullish S&P can act as a leading indicator for Bitcoin, which then triggers altcoins like XRP, XLM, SUI, and HBAR to reclaim resistance zones and establish bullish technical patterns. Monitoring the stock market alongside crypto provides insight into market sentiment, capital rotation, and potential breakout timing. This dual analysis approach is crucial for investors looking to anticipate shifts rather than react after the fact. Additionally, correlations between equities and crypto are evolving. In the early days of Bitcoin, its price often moved independently of traditional markets. Today, however, institutional adoption, derivatives markets, and interconnected financial instruments have increased the correlation, particularly during periods of macroeconomic uncertainty. Traders who understand this interconnectedness can identify opportunities for strategic entries, hedges, and portfolio allocation adjustments. In summary, tracking the S&P 500 and other major stock indices is not just an academic exercise. It is a strategic tool for crypto traders and investors. By understanding the relationship between equities and crypto, observing critical demand zones, analyzing liquidity flows, and monitoring macroeconomic signals, one can gain a comprehensive view of market dynamics. This approach allows traders to anticipate potential shifts in momentum, recognize breakout opportunities, and make informed decisions that align with broader market trends ultimately increasing the probability of capitalizing on the next significant wave of crypto movements. And that wraps up our deep dive into today's crypto market movements. We've seen major altcoin surges, Bitcoin and Ethereum holding critical levels, and the broader stock market starting to influence sentiment in ways that could set the stage for the next big breakout. The crypto market moves fast, sometimes faster than we can even imagine, and every day presents new opportunities. Whether you're a trader hunting for short-term gains, an investor monitoring long-term trends, or simply someone looking to understand how these markets behave, there's always something to learn, something to anticipate, and something to act on. Staying informed is not just a choice. It's a necessity in this fast-paced space. By keeping track of market momentum, key levels, and the connections between crypto and traditional finance, you give yourself a real edge, positioning yourself to make smarter decisions and seize opportunities before the crowd catches on. If you found this analysis insightful and want to stay ahead of the curve, don't wait. Hit that like button, subscribe to the channel, and turn on notifications so you never miss another update. Join our growing community of crypto enthusiasts, stay connected to the latest trends, and be the first to catch every surge, every breakout, and every major shift in the market. Remember, in crypto, timing is everything, and being informed is your greatest advantage. Thank you for watching, for staying engaged, and for being part of this journey. We'll continue breaking down the market, uncovering key insights, and helping you navigate every twist and turn. See you in the next update, and until then, stay sharp, stay informed, and stay ahead.